Hello, ladies and gentlemen. My name is Greg Michalowski from Forexlive.com. Today's date is October 7th, 2014. I'm going to talk about gold. Gold buyers return as the dollar falls, and trading here today is the bottom in. In order to determine the bottom, we have to take a look at some of the technicals, I think, and determine what they're saying to us from a technical perspective. And if we go back to the end of June of 2013, we had a low that came in around the 1180. 0.74 level. And then if we go back, go to the end of December of 2013, the same year, we go back, we have a low price that came in at the 1182.35. And if we go to today's low, what do we have as a low? 1182.93. So we have three lows, all within about $2 of each other in gold, from 1180 to 1182 and change, 1182.93. Significant, yes. Almost a triple bottom in place there. They're spread apart, 6 months, maybe 9 months apart for the other one. And so that is a significant development from a technical perspective. We're off those lows. We're trading at 1206.86 currently at the moment. A good 26 or so dollars off of that low. Now, let's take a look at a little closer at the daily chart. And we're going to take a look at some trend lines here. And I put a trend line across the top here and then a parallel trend line on the bottom. And on Friday's trade, we came down to the low trend line here, and we closed right near that low. So it wasn't, we needed to see what the market was going to do today, where we're going to go below that trend line, where we're going to break below the 1180.21 low from June of last year, and slide further to the downside for gold, have the dollar get stronger, continue that trend. And the answer is no. The market went below that trend line and then rebounded back to the upside. Now, at the lows here today, we also had another trend line here connecting the highs here with, and put a parallel trend line on this line. And what do? We found support against that trend line. So what do we do at the bottom today? We found support against the 1180 level. We found support against this trend line. We failed on the break of this trend line on the move to the downside, but we broke back above it around the 1190 level, and we moved higher, and we closed near the high for the day. So off the daily chart, it's showing reasons to think that a bottom might be in place, isn't it? And the answer is yes. Let's take a look at the hourly chart and see what that is telling us. And we take a look at the hourly chart, and we put a line in around the 1190 level. Remember, the 1190 level was the not only the low from on Friday's trade, but it's also where we broke back above that trend line, that bottom trend line on the daily chart, right? And so we went up to around the 1190 level. We retraced, we gathered some the market gathered itself, and then we broke above the 1190 level. And look at this bar. This is one of the biggest bars of the day, right? And so when the market moved above that 1190 level, we saw big buying to the upside. That's a tell. That tells you that there's buyers down there. And those buyers continued through here. And then we came up to this trend line right here in the hourly chart. We don't see this off the daily chart, but off the hourly chart, we have a nice little line here that connects some lows here. And on Friday, when the market fell below that line right here and then corrected up, where do we correct up to? The underside of that trend line. And then we moved to the downside and went through the 1190 level and down to our low in trading here today. And today, when we came back up to that trend line, what did? We found sellers initially against that line. So the market was hoping to stay below this level, but no, buyers came in. And what did the buyers do on this bar right here? Took the price surging to the upside. What's the other what else do you notice about this line right here? Well, it's one of the bigger bars, just like over here. So we saw momentum buying here. We saw buyers entering, buyers overtaking sellers, and a move to the upside in a fast way. All right. So bulls were back in, or the buyers were back in. Another tell. All right. So now what do we have going forward? If you're not long in this in gold, what will you be looking for on a corrective move? Well, on a corrective move overnight, where might we look for support? And I would say against this trend line right here. Remember, it was we found support here, 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 and then we found resistance against the line here and again right here before breaking to the upside. So if the market goes down here in overnight trading, we're going to look for support against the 1201.90 level. Let's call it 1202. We also have a 38.2% retracement of this move to the upside, which comes in about the 1199 level, 1198.96. So 1199 and 1202, what's in between that? 1200. Nice little round number for the market to find a support against on any sort of corrective move overnight. So this area right here, this box right here, is going to be my line in the sand and overnight. Stay above that level, bullish. Move below it, bearish. Now, we may not even get down to that level. We may find support against the 100-hour moving average. That's the blue line in this chart. And what we'd be looking for in that case is a break above this double high right here. We have a high right here and separated by a couple hours and another high right there. So stay above this level. And aggressive buyers here might look to buy gold and look for a break above the 1208.90 level as the day progresses. And any sort of move above the 1208.90 level would be more bullish for gold, and we'd expect the price then to get above the 200-hour moving average. Now let's talk a little bit about the 200-hour moving average, because this too is going to be a telling level that we're going to need to get above and stay above in order for the bulls to remain in control and for the bottom to be in place. In the month of September, this was the first time that the market moved above the 200-hour moving average right here, and we stayed above it for 1, 2, and the third hour we were below it. This was the second time we moved above the 200-hour moving average, and we stayed above it once, and then came down to it, and then moved to try to move up again above it, and maybe we spent 3 or 4 hours above it there. This was the third time it went above, and we stayed once, and maybe 2 bars, and then moved down. This one we didn't get its close above it. This one we didn't close above it. This one we spent. So you can see every time the market's gone above the 200-hour moving average, it's failed. So if we're going to go higher, if that bottom's in place, if we can stay above the 100-hour moving average, or we can stay above this 1198 to 1202 level, if we can stay above this area right here and move above the 200-hour moving average, we're going to need to see it stay above that 200-hour moving average. If it's able to stay above that 200-hour moving average, I think we have further momentum that could take this price to a minimum up to the 1236.20 level. That's a 38.2% retracement of the move down from the August high to the October low. So there you have it, a look at the gold. If you like this video and want to see more of them in the future, I ask you kindly to subscribe to our YouTube channel right there. Also, click on the like button. All right, the like button means a lot to us. Just click on it. And if you have a comment, feel free to put that comment in the box. That would be greatly appreciated. And for other Forex news and commentary on Forex prices or gold, please visit us daily at forexlive.com. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.